So I'm pleased to introduce to some of you for the first time the Legacy Minerals company and provide an update to others that know the story well. Legacy is focused on exploration in New South Wales. Our valuation is underpinned by the 1.2 million ounce gold equivalent resource at Mount Carrington. We couple that with a lot going on across our other projects funded through our joint venture partnerships. The presentation's been made available, so please view the disclaimer. So how do we deliver value? Well, Legacy has a two-pronged strategy to do so. The first one is underpinned by that valuation in Mount Carrington. Mount Carrington, a 1.2 million ounce gold equivalent resource. It's a historical mining site, and previous explorers have very much looked at it as a near-term development opportunity. And we feel like there is a great opportunity to add significant resources to that and then continue to take it down that development pathway. So there's a significant exploration upside there. The second prong of the attack is the discovery potential. So, as was mentioned earlier, two ways to be invested in the junior stocks. You want leverage to the gold price, or you want to be leveraged to the potential outperformance that a major discovery can make. And so we're trying to deliver on both those fronts, and we do that through our 100% owned Mount Carrington project and our drilling there, as well as our joint venture partners. And just yesterday we announced that Rio Tinto will be looking to joint venture with us on our Thompson project, back at Burke. And lastly, the investment leverage. So Legacy has a low shares on issue. We are cashed up. We've got 6 million cash in the bank. And it means that any positive news that comes through Legacy is going to be much more likely to be directly flowing through to the share price and the market cap. So we're exploring in New South Wales, and we're focused in New South Wales. It's our backyard, and we feel like that gives us a competitive advantage. Why New South Wales? Well, it's home to Australia's largest copper and gold mine, the Cadia Valley mine. It's also where the smart money has been coming from the majors. So we've had FMG, we've had AngloGold Ashanti and Goldfields all invest multi-millions of dollars, over $100 million, pushing $200 million of joint venture funding in the district. And it's also been where companies like Evolution and Newmont have recently completed deals. And of course, we've had Rio Tinto move into the district, one of the largest peggings by a company in recent time, in particular for Rio Tinto coming back into the state of New South Wales. So good projects are nothing without a board and a team that can deliver on them. And what we have here, I'm fortunate to have both an operational side and a technical strength side. So on the operational side, we've got Dr. David Carlin, Chairman, Economics background, previously the Chair of Rex Minerals. Matt Wall, senior roles with EDFA Trading, Wood Mackenzie, and then Christopher Byrne. Chris is the Managing Director, CEO, and engineer, and previous experience in the delivery of large and complex mining and infrastructure projects in both New South Wales and Queensland. On the technical side, I'm fortunate to have Doug Menzies and Dr. John Greenfield. Doug, many years a consultant in epithermal and porphyry systems, which is what our company focuses on. And Dr. John Greenfield was the previous head of the Geological Survey of New South Wales. So that's the New South Wales government's geological body. He was the director of. The company has low shares on issue. We've got $6 million cash in the bank and no debt. So now onto the Mount Carrington project. So the Mount Carrington project, a 1.2 million ounce gold equivalent project, providing the opportunity for a near-term development pathway as well as that exceptional discovery exposure. The project has very high grades of both gold, silver and copper, and I'll demonstrate that through some of the results that I'll mention at the end there. The foundation is built on that 1.2 million ounces of gold. So within the space of about a year and a half, we've taken that project from 650,000 ounces to 1.2 million ounces gold equivalent. There is an estimate of about $100 million spent on previous infrastructure and work on the project. And so we are the direct beneficiaries of that previous work. We're developing it through the pathway where we've now currently got part of the project pegged as an ALA, which is a bridging between the exploration licence and a future mining lease. We're undergoing a scoping study and plan for release towards the end of this year. And the idea there is to be the foundational, I suppose, study that demonstrates the economics of the project. And it gives investors clarity and surety about the company's in-ground value and its leverage to an increasing gold and silver price. And then the discovery story. So I'm an exploration geologist by background, and so this is the really exciting part for me. 12 metres at 48 grams gold, 2,500 grams silver. 118 metres at 1.71 grams per tonne gold, and 18.9 metres at almost 6% copper. All of those very shallow, and a number of those not followed up. This was part of the resource that was released earlier this year. And what you can see here is a low sulphidation system, gone into detail then by Damien, and it shows that what we've got here is a historical or a hot spring environment, and it's deposited gold and silver very close to surface. You'll see that the resource pits here are all open pits. The open pits indicate that the actual mineralisation either starts at surface or is just below surface. And what it presents to us is that exceptional opportunity to start defining resources at depth. There's currently no underground resources here in a project that's really known for, these epithermals are known for their high-grade underground potential. The first part of demonstrating the economics of this project was through our update of the initial scoping study done by previous miners and explorers. This stage 1 scoping study showed at a gold price of $5,000, and only looking at now 17% of the known mineral resource estimate, a NPV of 388 million, an IRR of 141%, producing 34,000 ounces a year. And what we're looking now, and what the exciting part of this future study is going to be, is this assessment of the much larger mineral resource estimate. In terms of the infrastructure that's on site, that image on the right-hand side, you'll notice that there is a freshwater dam deliberately built to provide water for the mine, or the previous mine. It was seen as a mining opportunity up until 2020. Then we've taken it, we're really pursuing this blue sky potential that can come through a discovery opportunity here. It's also got a built tailings dam, there's power to site, haul roads have been built and it's been pre-stripped. Stepping back, the exploration opportunity. So Legacy has pretty well covered the entire historic caldera, the old caldera, 17 kilometres in diameter. In the central image, you'll see that that caldera is mineralised from tip to toe. And so that gives us great excitement for the potential blue sky discovery opportunities that sit across the tenement that haven't been tested. And that image on the right-hand side is the new geophysical techniques that we're starting to apply to uncover these discovery opportunities. Those red lines that go through are indicative of conductivity features that might provide guidance as to where mineralised fluids are coming through the surface. And so this sort of work has never been completed before. We engaged the same group that interpreted the Canaan-2 deposit, and I'll go into a little bit on Canaan-2 in a second because we think there's analogues between our deposit here and Canaan-2, which is an 18 million ounce deposit. The experts that interpreted their airborne mobile MT data identified these conductivity trends, and it clearly gives us the confidence to start testing these deposits at depth, as well as stepping away and testing these other conductivity features that still haven't been tested. The first of which is going to be the Battery Creek target. So this target was identified as an intrusive breccia. It's got widespread copper, arsenic and gold anomalism, and we're going to be the first at testing it, and it's coincident with one of these conductivity features sitting near surface. We've got up to 4,500 metres approved to test this target, and the rigs are on site and spinning at the moment. After the drilling at Battery, we're going to be moving to the Mascot prospect. So the Mascot prospect was last drilled on this vein system in 1969-1970. They did not assay for gold. The drilling there identified wide zones of silver mineralisation. The ones that I'll point out there, 18 metres at 237 grams silver, 9 metres at 112 grams silver, 24 metres at 45 grams silver. We don't know what the assays for gold would have been, but we're greatly encouraged by the recent rock chipping that we've done there, which identified that this vein trend has gold up to 11 grams gold, 7 grams gold and 2 grams gold, as well as the high-grade silver that we knew to exist there. 220 grams silver was the highest in that campaign. This is the analogy. Kanan-2, which is a deposit, low sulfidation epithermal and porphyry deposit that sits in Papua New Guinea, was bought off Barrick 2015, 800,000 ounces. And from there, the company that bought it off Barrick focused on two things. One was near mine definition, so that resource definition near mine, drilling in and around known mineralisation. And two, focusing on the obvious greenfield discovery opportunities. And through that work, they immediately delivered a 2.2 million ounce resource 2 years later. And then by 2024, it was 18 million ounce. I think today, as I stand before you, it's about 22 million ounces gold equivalent. We think that we're at the start of this journey. And the project, there is a small line that runs on the bottom of that bottom image there. The Mount Carrington project has about 100,000 metres of drilling on it, 3,000 drill holes, the average depth of which is 50 metres. So that 50-metre trend is demonstrated by that black line on that bottom image. So you can see that these low sulfidation epithermal and porphyry systems can have great extent, and we think that there is a great opportunity here to expand upon. This is some of the discovery stories that we're going to be chasing. So the red polygons, I just want to point out that a lot of them haven't been tested. And I just want to highlight that those lines that you see on the screen are drill holes. And those drill holes are focusing on 2 or 3 key polygons. For us, the great excitement are these obvious chargeability features. This is an IP data set that wasn't ever digitised. Some of this was paper copies. And we've gone back, remodelled it, and highlighted some of these that have never been drill tested before but have mineralisation and workings on surface. So these are some of the walk-up drill targets and opportunities that we see on the project. The second prong, which is the discovery exposure, is supported by these non-dilutionary and exposure to discovery stories through the right partners and the right projects, right partnerships on the right project. And that includes the most recent one with Rio Tinto. So Rio Tinto came in, I'll touch on this. Why invest in a company that's got joint ventures? Well, one, the money goes further. So every dollar that you put in, we're delivering 4, 5, 6 times in terms of money back into the ground. And it retains our exposure to the great upside that can come with a discovery. I'll just highlight the one second from the right, which is the Greatland Gold discovery story after they discovered the Havieron deposit in Western Australia. By the time that they went from that discovery through to 10 times their market cap, it was a 10 times in the increase of their share price, but they only held 25% of that project. Now, we have multiples of this opportunity going on at any one time. By the end of this year, we'll have 3 rigs spinning across 3 different projects. The Thompson project, just yesterday was announced that we've JV'd it with Rio Tinto, the option to go into a $25 million JV for 80%. And why Rio Tinto? Well, Rio Tinto made the Winu discovery. The Winu discovery is a major discovery, copper-gold discovery, intrusion-related copper-gold discovery in Western Australia. And their expertise is exactly what we need to unlock this project. So this project is over 200 kilometres long. It would take you longer to drive from end to end here than it would for you to go from here to Nelson Bay or past Newcastle. It's a very large project, and it's the sort of project that requires the funding and the expertise that a major can provide. So we're excited to be working on that with them. So the key investment takeaways. If you're interested in that leverage to a gold price in a pre-development story, if you're interested in having what an outperformance in a share price can deliver through exposure to major discoveries, I encourage you to come chat to us at the booth. We've got 1.2 million ounces gold equivalent at the Mount Carrington project that we're going to be exploring aggressively. We've got near-term development optionality, so we've got a scoping study that we're planning to get out before the end of this year. Drilling is underway currently, and we've got a portfolio of joint ventures. By the end of this year, we'll have 3 drill rigs spinning across 3 different projects, all of which are precious metals, including platinum. We've got a tight capital structure, $6 million cash in bank. We're highly leveraged to discovery success because of that. And I'll just highlight in terms of the time frame, that Mount Carrington battery drilling is underway. We've got the scoping study due out before the end of the year. and we've got the drill results coming from Battery and drilling underway at Mascot going into the beginning of next year. So thank you very much.